Welcome to Investors Insights. Today we're talking about the Fed and how the Fed is back in focus. Thank you for watching. Had a busy week last week. Last Thursday could have been considered Super Thursday. We had Comey testifying, the ECB leaving rates unchanged, and then a lot of uncertainty around the UK election and their results there. But good thing is the market shrugged that off. And the past couple weeks, the market's been really good at shrugging off all the noise, and a lot of that has to do with the strong earnings season that we just had, and so that's really good. But this week it's about the Fed. Trey, talk about that.
Yeah, so kind of the Fed's back in focus. I feel like the last few meetings we've known what's going to happen. In June, I think the market's fairly confident we're going to have a 25 basis point hike in the Fed funds rate, and so that's really priced in. It's not really this meeting that's going to be hugely impactful. It's after this point. We're not sure what's going to happen. Is the Fed going to raise again? Are they going to reduce their balance sheet? What happens from here? The unknown. And I think the Fed, with Janet Yellen being likely removed as Fed president early next year, might start to want to reinsert their influence on the markets because they've really been put to the back burner by what you said. Earnings have been great. The fiscal side of politics has really taken on a lot more of the news cycle. And I think that they might use this meeting to reinsert their influence. It'll be very interesting to watch.
Well, and also, too, in the fall, Trey and I were talking about this earlier, when you look at it, it'll probably be September and October, they'll stop the bond reinvestment policy. Yeah. So you'll have some milder impact versus rate, but an impact nonetheless, because that'll probably start kicking up then, too.
Really good point. We talked about that a couple weeks ago, how the rate hikes really haven't impacted individuals because they haven't impacted mortgages or corporate bond rates. That balance sheet will have a much larger impact, and that gives them two tools in the fall. Well, right now they've got one interest rate hikes. We'll see. Two tools adds another layer of uncertainty.
It does.
And last week we really focused on infrastructure and the importance of infrastructure, how Congress really needs to get their act together. Ashley, continue that conversation today because it's really important.
It is. We had a good follow-up from that in that because of the Comey testimony, we felt like, and it did, it got a little bit lost in the news. But what was interesting about that is a reminder, we were mentioning last week that it was about $1 trillion that was announced in infrastructure. But what was interesting about that is that about $200 billion of that is really truly through the government. The other $800 billion, in a very unique and we think good way to do it, is that Trump is looking at really privatizing that, sending about $800 billion of that out into the private sector by making the regulatory process tighter. And what we mean by that is the permitting process. The permitting process has been so long on these infrastructure projects, it just really hadn't helped us much. And he's trying to shrink that permitting process down to a very short range within the private sector, so it would speed the multiplier effect of the infrastructure projects coming out. So we'll be watching for the impact of that.
Yeah, a lot less good's done if you've got to wait 3 years once you announce something to see it done. People kind of lose interest.
They do.
Yeah. Well, thank you for watching. Please follow us on Facebook, LinkedIn, and Twitter. As always, please give us a call. We love to hear from you. Have a great week.